So yeah guys, now we're actually about to cover one of the most important lessons, and that is how long should you hold your trades. So when we're done with this lesson guys, we're going to be analyzing the market together, so be sure to actually get to that point. Be sure you watch the video until we actually show you how we analyze the market. So we're going to show you how we actually use the lessons that we're going to cover from here to help you guys be able to find better entries and be able to reach your trading success. So without wasting any further time, let's continue. So now we're going to quickly cover the overview of our lesson guys. We're going to firstly start with how long you should hold your trades, risk reward ratio, what kind of trade you're in, how volatile is the market, and we're going to finish with the two last topics, which is tips on holding onto your winning trades and how to find trading success. So before we get to that guys, I want to start with the most important lesson, and that is basically being able to understand how the market works. Right? So whenever you trade guys, you have to know that every time you trade, you need to firstly start by identifying your high and your low. Basically what will be made at is being able to identify your support and resistance. Our support is basically our floor, meaning that we want to use the support structure to be able to know when the market will reverse, as this will play the role of a floor. So whenever we have a ceiling, we know that basically acts as our resistance, right? As long as we're at the bottom, we're looking for buying opportunities, and as long as we're at the top, we're looking for selling opportunities. So let's say basically you're at this point and you're analyzing the market, and as you see, the market has been flowing like this, and it gets to a point where you want to enter a trade, right? So the market was pushing down towards our support structure, and you found yourself at the support and you basically wanted to go for a buy, right? So this is how you would do when you analyze. So I want you guys to know that it doesn't mean that because I analyze like this, the market will move exactly like that. You're gonna see it's actually never the case. When I analyze, I'm only using the past events to help me be able to find highly probable trades. Though I said the market will move in this direction, it doesn't mean it will move like that exactly. The market will decide how long it will take for it to reach that point. As you can see, it's up to the market to decide how long it will take to reach your level. When you choose a direction, you're only just choosing the direction and not how long the market will actually reach your level. Meaning that guys, as long as you're gonna be trading here with us, when we talk about Forex, that time is irrelevant, meaning that whenever you enter a trade, don't say that because you entered the trade today, you want it to close on the same date. Only the market will decide when to close. You'll get to see that the only thing that matters in the Forex industry is, of course, volatility, right? Volatility is obviously made by what? The power of buyers and sellers. That's what actually causes the market to move. Meaning that whenever I'm going to be trading the Forex industry, guys, I have to know that it doesn't mean that because I want to go for a direction, the market should move exactly like that at that time. So let me explain to you what I mean by this. So you'll find yourself that the market was moving like this. When the market moves in this kind of manner, we call it low volatility, right? However, when the market gets enough strength and it starts shooting up like so, we call this high volatility. Such movement is caused by the market, meaning that there will come a time when you're going to enter a trade here, of which the market will become too volatile, and this way you're going to be able to make a lot of money. However, if you're going to now start forecasting for the future to say it will always happen like this, you'll be of course incorrect, because there will also come a time where you're going to enter a trade and you have to hold for at least a few days, if not hours, until the market moves. So we have to understand that volatility is something that is actually caused by the market, and that is something we cannot control. Time is irrelevant. The only thing that actually moves the market is volatility. As you see guys, before we start our lesson, it's important for you to understand how the Forex market works. So I quickly brought you here guys because I want to explain something that I think it is very important for you guys to actually get to understand. So we know that whenever the market approached this level, we were looking for buying opportunities. As you can see guys, this is acting as It's a support structure for this buy trend. The market is now going on a bullish momentum and it has an uptrending support, meaning that this is still our floor. However, it is still uptrending. Should the market cross it, it's going to become a resistance, right? So I want to cover a simple concept real quickly for you guys to understand. So I want to quickly cover, guys, what this actually means. So this S here stands for support, meaning that as long as we're still above this line here, we are looking for buying opportunities. Only when we cross, that's when we're going to look for selling opportunities, meaning that our floor will become our ceiling. As long as this is a floor, should I cross my floor, it becomes a ceiling. Equally opposite, if this is basically my ceiling, should the market decide to actually go and cross this level, it will now become a support. Whereas in this stance, our ceiling becomes our floor. As you can see, guys, it's important for you to be able to understand these concepts, as you can also use them to enter some trades. So now back to our chart, we see that there's an uptrending support structure. The market has broke support and now it's beneath it, making it a potential resistance. Hence, this is one of the indicators that I might use to help me find a sell entry. So I see that I'm expecting the market to sell at this point. So this is my direction, as you see, guys. I'm expecting the market to sell in this direction. I'm not saying the market will actually sell exactly like this or as quickly as my arrow dictates. No, we do not lead the market, we only follow. So I'm only following the trend. As the trend moves from a buy into a sell, I'm only entering my sell trade and choosing my direction. However, the length or the time it will take to reach my point, for that I cannot control. So let's see what happened. So as you can see here, guys, the market actually came back up. As you can see here, the market came back a bit. I went to some bit of losses, and from there it decided to push back up and to come back and retest that level, which is basically, if you look by the past event, it was of course more of a ceiling. As you see here, guys, we had a potential market ceiling there where the market came to retest our ceiling and dropping as the overall sell. As you can see here, guys, whenever we say the market will be dropping, whenever we're going to be analyzing, we cannot use or dictate how fast or how long the market will take. That will depend solely on the market. The only thing we can do is only choose the direction the market would head into. Let's look at the next example. So if you look at this example here, guys, I analyzed the market and I basically saw my nice buy trade and I want to go for a buy and I made my analysis, you see. So here from my analysis, guys, what do you think? How long do you think it will take for me to actually come from here and end up reaching this point? So I want you guys to understand that is something that we cannot control. We just have to wait to see how the market actually plays out. As you can see here, guys, the market actually took a longer time. As you see, there will come a time where you're going to be holding your trades for a bit longer than expected due to low volatility. As you can see here, guys, we experienced some bit of low volatility and the market became volatile and then came back down again with low volatility and then shot back towards our resistance structure and completed our setup. So this is something that we cannot control, guys. Volatility is determined by the market. We cannot control that. The only thing we can do is basically follow and take what the market gives us. So now that you actually understand this concept and how time works with Forex, we can continue with our lesson. So now, guys, we're going to be covering how long should you hold your trades. So the first one we're going to start with is risk reward ratio. This is the most important because it will actually determine your overall growth in the Forex industry. So the first thing is basically having a positive or a break-even risk reward ratio, meaning that, guys, we actually want to focus on the fourth and the second quadrant, right? We want to have low risk and high return, low risk and low return. You should never find yourself having a high risk, high return, and this one is even not an option. So don't ever find yourself using this quadrant. You can only use this quadrant when you have money that you're actually more than willing to lose. If you're going to be doing some small challenges, that's when you can go for this quadrant. However, for you to actually trade safe, it's important for you to actually use low risk, as in order for you to win in Forex trading, you're gonna know that risk management is also one of the most important factors that you must always cater for. So now, what does positive risk reward ratio or neutral risk reward ratio mean? We want to make sure that each trade that we take, we're actually going to be willing to win 2 to lose one. Meaning that when I trade, I want to make sure that my analysis is in a way that I'm actually willing to win 2 and lose 1. As you can see, guys, this will be an overall growth. As long as I know that I'm losing 1 and having an overall win of 2, my market will grow indefinitely. As we know, 1 will represent my losses and 2 obviously will represent my winners. So in order for us to apply this, we need to know that we have to actually stick to 3 points: SL, TP, and entry points. Meaning that, guys, if you find yourself being in a position that you want to go for a buy, you have to know that you must be willing to lose 1 to gain 2. Meaning that if I want to go for a buy here, if it's a buy position, I must know that my stop loss must be at a level where I want to lose -1, but get to a point where I'm willing to actually win at least +2. It's important for you guys to have an overall positive statistical advantage. So the second thing we're going to be looking for, guys, is what kind of trade you're in. You have to know what kind of trade you're looking for, and the 2 types of trade that we're going to be using is either you're going to be swinging or scalping, and that will actually help you know how long you should hold your trades. So what is a swing and what is a scalp? To swing is when you're going to hold your trade for more than a day, and when you scalp is actually when you're looking for some active trading, where you're going to be quickly in and out of the market. So being able to understand that can actually help us a lot. So how can we actually use this information in a way that we can understand it? Let me just make a brief example. Let's say, as usual, we have our resistance at the top, and we know that we have a support structure at the bottom. And basically at this point, guys, we're actually analyzing this from a weekly perspective, meaning that we're analyzing from a very bigger time frame. So the market can actually do this, right? You can find a time where the market does this. What do I mean by this? How can you understand how to swing or how to scalp? So basically, guys, what scalping is focusing on such small trades. It's basically going to smaller time frame where you're going to be analyzing the market only at the current moment, but on a smaller time frame, not looking at the overall. So basically this will be your now resistance, and this is going to be a top. As you can see, the movement is going to take now a short period, whereas if I'm actually looking for a swing trade, it's going to be a bigger time frame. It's going to take time to come from here to here, but it will take a shorter time to come from here to here. So when I scalp, I'll be focusing on those small things, but when I swing, I want to actually catch the whole movement. So as you know, when you trade, you have to understand if you are a patient person or you want to be more of a scalper who's going to be in and out of the market. So lastly, guys, the most and last thing important one is basically volatility, right? So in your case, guys, luckily we have covered this one, so you already know how the volatility work. As you can see, guys, all these 3 actually help a lot in knowing that how long you should hold your trades. As you know, risk reward ratio helps us being able to know that we're going to be having an overall win. Scalping is to know which trade we're going to be taking. Are we going to be looking for a scalp or a swing trade? And lastly, is the market volatile or not? So without wasting any further time, let's continue. So now, guys, we're going to cover the tips on how to hold on to your winning trades, right? So in order for you to do that, guys, you need to know that you need to firstly identify your exit point, right? That is the most important, as you're going to need it in order for you to know when to actually close your trades. So for you to know on how long you should hold your trades, you're going to be able to do that knowing that you know when to close it. That's how long you can hold that trade. You're not going to close due to time, but you're going to close due to a level that the market must reach. You understand that because we covered it. So now the next thing that you need to know, guys, is scaling in. What is scaling in? So when we talk about scaling in, guys, basically that means we are adding to our winners. So let's say the market is currently at this point and I'm going for a nice buying position here. So I'm analyzing the market and I'm seeing that I want to go for a buy. This is my direction. I've identified my support structure and I've seen my resistance structure, and I'm seeing the market is now going for potential breaking of this trend line that we see here, and we're expecting the market to actually push to the upside and test the overall resistance. So I'm going for a buy, enter my buy trade, and the market goes up. So I see that the market pushed up. Now I'm seeing basically where the level has been crossed and the market is now playing in the zone. I still have my buy trade here. So what is scaling in? Scaling in is when you add another buy onto your winning trades. Meaning that, guys, most of the time, many people only add more trades onto their losing trades. And that is how their losses always become more. How the world works, like, that's exactly how the Forex market also works. Watch your focus on growth. So if you're gonna be focusing a lot on your losses, if you're gonna be adding on your losses, busy being on your screen for your losses will be more. If you're going to be focusing a lot on your profits, being able to increase your profits, working a lot on your profits will be more. Watch your focus on growth. That is the most important concept that you're supposed to know, and that will help you a lot as a trader. So we see that the market here, we've entered a buy, and it gave us another buy position, we've entered another buy, and that's basically when we're scaling in, right? As long as you see a nice position to enter another buy, you're going to enter that buy. Here it's going to be basically a nice buy entry. Here is upon retest, this is here upon break of a trend, and here we basically close the trades with a nice scaling in method. So now guys, what is scaling out? So when we scale out guys, is when you have a bigger position running. Let's say you have big profits, however you want to hold until a specific level, right? So when you scale out, you're basically decreasing the amount of profits that you have on your running trade, meaning that you're actually closing half and leaving the remaining half in your running position until it actually hits the final exiting level. So next we're going to cover setting trading times to review your trades. This is one of the most important that you actually guys must know. Many people think that when you're going to trade Forex, you have to be on the screen the whole day, sleep, work, repeat, sleep, work, repeat, which is not the case. When you trade guys, you're going to see that you need to have a time where you're going to be analyzing your charts. It can be in the morning, you're going to be analyzing your charts, and then you're going to find your time. It can be in the AMs or midday where you're going to enter your trades, and then you're going to have a time you're going to have to let your trades run, as they have to do they take their course, and then you're gonna come back and then check at a different time on how the trades actually went, and that's how we actually go about trading. So the last and the most important thing guys is basically staying away from the charts. This one we've been covering it over and over again, knowing that if you're gonna be glued to the screen guys, that's how the Forex market will get to work you. That's what's gonna make you actually change your overall plan, and you're gonna end up being a losing trader. So now we're done with this topic guys. I hope you're enjoying the lesson as it is. We can continue, and remember, after covering all this lesson guys, we're gonna be analyzing the market together. So last but not least guys, how to find your trading success. I'm gonna wrap this as quickly as I possibly can. So the first thing that you're actually gonna need is to firstly identify a proven trading concepts. For example, we can use breakouts, or you can use high and low. What high and low is basically be able to find the low for a specific day and the high for that specific day. So now, secondly, you need to develop a strategy around your trading concept that you might have found. So you have to see how the market works, and you're gonna find a way to make sure that you're gonna back test that strategy, which is step number 3. You're gonna be validating your strategy and back testing and seeing how you can actually make it work. The last and the most important tip is to always put yourself in an environment where you will stick to your trading strategy no matter what. So it's important for you to actually find a strategy that suits your trading style, and you're gonna work on it for the longest time. And apart from that guys, stay tuned for our analysis. I hope you enjoyed the lesson. Let's get more into it. Yeah, so welcome back to the charts guys. So today we're going to be covering USD CHF, also known as the dollar Swiss. So we're going to be analyzing this market all together guys. So you're going to see from our analysis, we always analyze from higher time frame and we go to smaller time frame in order for us to actually identify our entry points. So we use higher time frame to know the overall direction, and we go to smaller time frame in order for us to find nice entry points. So without wasting any further time, let's jump in. So now guys, we are looking at this dollar Swiss on a weekly chart. So we can see that the market was actually coming from a bearish trend. You can see that the market was actually pushing towards the downside, and we go to the level we experienced some pushback. As you can see now, this became a potential support structure, right? Let me go a bit in for you guys to be able to see properly. So first things first guys, we saw that the market actually reversed here, came back up and reversed one more time by actually giving us a nice exhaustion or a pullback at this potential price movement. So now let's look at this. We are seeing that this can now be able to be used to identify our support structure. As we can see, the market reversed at this point and another time here, making it now a more stronger support level. So that's how it came to this point. We knew we were looking for basically a support structure. So what else can we see at this point? We can see that we have another support structure, of which if we can put this here, we can see that this is basically a level that we want to cater and focus on, right? We do have a nice support structure here because this is where the market usually reverses. Again guys, we can see that we also have a nice resistance structure here. Once again, you can see that this is where the market usually reverse at the top. So now we can see from a weekly point of view, we were able to identify our high and low. This is basically being able to identify our major support and resistance, knowing that for now we're still under this nice playground, right? And if we go more with trends, we're gonna see that we are seeing a nice strong resistance here. You can see here the market also tests this level a lot, as this can become for us a nice potential resistance. As we can see from the market previously, we're using the historical price movement in order for us to be able to understand the next potential price movement. So we know that if the market should approach this level, we're going to look for a potential sell, or if we cross this line, we're going to look for potential buys until this point. That is one of the ways we can use analysis in order to know how long we should hold our trades and when to exit. So we know at this point you want to exit a sell, and at this point you want to exit a buy should the market push and cross towards this resistance structure and actually in the final resistance at that point. Since we identify this level, we need to sink in a bit deeper and see if the market is actually going to go for a buy or a sell. So in order for us to understand that, we need to know what the market did and if we were still under the buy or the sell. So how do you go about doing that? I have to go zoom out and see that the market was actually selling, and from this point of view, guys, I can actually see that the market has still once again formed for me a nice small resistance. So usually, guys, we don't like to actually put in a lot on our charts, but at this point it's important for you guys to actually have this, as I want to be able to explain everything more in depth for you guys to be able to understand why we actually take some positions and why we actually take some potential movements. So I'm going to change the color for that one. As you can see, now the color is in a way that you can understand. So we know that apart from just being below this resistance, we're also below this downtrending resistance, meaning from an overall weekly perspective, we're still under the selling opportunity, because if you look closely here, the market was tested twice. If you can see, it's 1, 2, and coming back again to confirm that retest here, to knowing that we have now an actual downtrending resistance, right? So now let's go in a bit deeper and see what else can we do with this analysis. So we're gonna go into the daily chart and see what the daily has in store for us. So we're now in the daily chart, guys. So you can see the market has hit the bottom here and it has hit the top here. So we need to understand how did this happen here, and basically I'm still seeing something here. I want to show you quickly. I'm seeing that before the market came here, it actually had to break first towards the structure. So I want to change this a bit, guys, so that they don't actually confuse you, so that you know which is which. So we see that the market here actually crossed this level here. So I'm just going to put this like this, guys, so that you understand. So I'm seeing the market here was still on a nice buy trend, as long as we're still above this, we're looking for buys, and on a cross we're gonna go for a sell. Usually we like using this analysis, guys, as you know, most of the time that's how we analyze our pair. So we have to make sure we're catering for most touches as well. So we knew that as long as we're still above this uptrending support, we're gonna look for buys, but when we cross our support structure, it now becomes our resistance. Hence, that's why the market would have sold. You would have entered a sell here, and we knew that this was a potential support structure. So for this analysis, you already knew that if you were to enter a sell here, you would have wanted to close, or you would have wanted to hold until this point right here. So what else happened? I see that basically for that to happen, guys, the market was actually on a nice buy trend. Let me quickly do this for you guys to actually understand and see what I'm talking about, right? You can see that the market was still on a nice buy trend here. So how can this work in a favor? We know this is an uptrending support, we know this is an uptrending resistance, and this here we have a small breakout because the market was just testing this overall resistance structure. Apart from that, everything is within our resistance here and our horizontal resistance as well. So the more I dive into the charts, guys, I can see that the market has more significant levels. So I can see if I put this here, I can easily find my significant level at the bottom here, and this one here. So I'm using all these instruments in order for me to understand what the market is doing, guys. I hope you're able to actually get to understand what's happening here. As you can see, the market is still under the setup, right? If you look closely here, guys, you're gonna see that should the market actually get enough momentum to push, making a nice head and shoulder here, it can be able to push and break towards the structure, knowing that it broke this major resistance and the overall weekly resistance. Therefore, we are now in the buy trend. We are back inside this buy trend here. So that happens by a power of retest, and after retesting, guys, we know from the point of view that we are now going to be looking for buying opportunities until the market actually reach that overall selling point, right? So that's what we'll do. We'll look for a buy. Should the market cross here, we knew it's going to be a buy. It's back inside the buy trend and it has crossed both our resistance. We're going to enter buy, and it's going to be a strong push to the upside. And for those who don't see the head and shoulder that I'm talking about, I'm going to quickly show you what I mean by that. If we dig in deeper here, guys, you're going to see the market actually came from here, went back down, came back up to retest this level, went back down again, came back to retest this level here, went back down, and now it's forming a potential head and shoulder. So since we're still under this position, guys, what I'm actually looking for is opposite of that direction. What I'm looking for currently, guys, I am now looking for what we call a nice selling opportunities. Why do I say that? I'm seeing that the market has the possibility of actually retesting this point and actually dropping towards this level, and for the market to reach a level, it will be testing the overall support structure. So for that, I need to confirm. Let me go to the weekly time frame quickly and show you what I mean by that. If you need to identify the overall support structure, you can see here as well, is still support structure here as well, guys. I don't know if you guys can see it in the touch, and that's basically the low of that. So meaning that because we're still under this resistance, guys, we are still looking for selling opportunities. Now let's go back to the smaller time frame in order to see what we're gonna do exactly. So if we look here closely, guys, if I would enter a sell with my analysis, guys, I'm going to be hoping to sell until it reaches the overall support structure.